From Revolver Resources, we have Managing Director Pat Williams, who has just successfully raised 2.6 million Australian dollars. Congratulations, Pat. Will you tell us about it?
Thanks, Danielle. It's great to be here today. So that's correct. We've taken a small on-market raise, 2.6 million in total, 800,000 of direct placement, and 1.6 million of convertible note.
And can you tell us about the plans for this cash? We did, of course, notice in July when you released that report regarding recommencing production at the Dianne Copper mine.
Yeah, look, so Danielle, clearly we're in a rising market. We've been talking to the listeners over the last 18 months about our effort and energy to put the Dianne mine back into production, and we're there. So, in the steps forward to get back into production, naturally, look, it's a rising market. So interest has increased, particularly since, as you say, that report that went out in January. We're at the tail end of our wet season, so we've got a little bit of a forced delay. No one wants to go digging holes, on the tail end of the wet season. So for those reasons, it's a rising market. Interest is significant in this project now. We have a range of interested parties, and the board will put together the best, lowest cost, risk-weighted funding that we can achieve for the project, and we've got a lot to choose from. So we're going to do that. The raise that we've done now allows us to keep momentum. As we said, we're going to lock in some procurement. We're ready to build this project, Danielle. That's what the listeners need to really feel energised about. So we're ready to go. In order for us to get the best project funding outcome, we're going to keep doing work. We've got work to do on site. We've got procurement. We've got a whole bunch of mobilisation to get ready for. And we took a small amount of money. The way we did it, I think, was very thoughtful and confident, shows the confidence of the company in that we prefer to take the majority of it as a future convertible note where, we expect price to improve and therefore the conversion will be at a higher price than we would have done if we'd done it all at a discounted placement. So, we're very happy with what we've done. I do have to say the team at Ignite Equities, again, have been fantastic. A window of opportunity, they guided us through it very skillfully, very efficient, in and done. The race was done in less than 3 hours. So, and we could have taken, multiples of the amount we took. So I think there's a lot of interest. There's a lot of excitement. We really do have something good. And we look forward to bringing, more and steady updates on how we're going.
Well, that is incredible momentum, Pat. And speaking of those next steps, can you tell us what some of those major milestones would be and maybe some associated timelines?
Look, we still, we still have a what the project is, Danielle, is a capital light. The study document, the recommencement document, talks about a $30 million spend. So it's not a lot of money to start tapping into, a copper cathode product, a LME A-grade copper cathode product. So it's a small amount of money. It's a short duration. If I had the money today, we'd certainly be in production in 2026. So it's a circa 9-month time frame. So again, it's compact, it's short, it's quick. We're well studied, well engineered, well prepared, and we look forward to feeding very positive and plentiful updates on how we're progressing. And the overlying reason that we're doing this project, Danielle, is it's a short duration. Once we're up and running, it to the current resource, we're running for 3.5 years. So we're anticipating a very strong cash flow. Looking at the way we're funding this at the project level, the company is going to generate the maximum amount of free cash possible, and we're going to use that to fund our growth. So we have excellent exploration projects and we certainly have quite some expectation of increasing the resource in the mine once we get started and once we get going. So it's an approach that the business is taking so that we can cash up and therefore limit future equity raises that aren't in the interests of the company. So we'll have our own war chest of cash that we can go and grow and look forward to taking the shareholders on the ride with us.
It certainly sounds like 2026 is going to be really transformative for Revolver. Pat, thank you so much, and please come back soon to keep us updated.
I certainly will. Thank you for your time.